Hey, welcome back to my YouTube channel. My name is Vikram Deol, and I help real estate agents just like you improve their systems, improve their brand, and improve their sales. And today, I want to talk to you guys a little bit about renting versus buying going into 2023. And I actually pulled some stats from Bigger Pockets. If you guys are not on Bigger Pockets, you should be definitely listening to Bigger Pockets. Even if you're not an investor yourself yet, you should start to think like your investors. And right now, going out of 2022 and going into 2023, there are going to be a ton of investment opportunities for those investors that have been on the sidelines waiting because sellers are going to get desperate. A lot of real estate agents who don't know what to say and don't know how to help their clients are going to position their clients in a very poor way, which is going to cost them money. So if you are a seller in this marketplace, please pick your real estate agent wisely. Don't go for the lowest cost option. Don't go because, uncles, brothers, sons, dogs, cousin, dog walker is a realtor and they need help. This is a lot of money on the line here. And the person you choose really matters more than ever in this market. Pre-pandemic rent, right? Just a couple of years ago, $1,640 nationwide. Guess what the rent is now? Throw it in the comments. I'll wait. $2,100. That is an increase of 27%. Now, you take that with all the other inflationary costs in this marketplace, gas, food, supplies for the home, and we are in a position where people are paying a lot more to live. Now, let's take in interest rates. We know what's going on in interest rates. Interest rates are going up. There are some estimates that interest rates will come down first or second quarter of next year. There are some estimates that it's going to be October of next year. Interest rates could hit 10%. There's all over the board. I haven't heard anything higher than 10%, but I have heard a 10% interest rate is on the table by many people who have a lot more money probably than you and I do. They are very connected and tapped in. So let's say interest rates continue to rise until October of 2023. And let's say rents continue to rise. Maybe not at the 10 to 15% per year, but Zillow rent month over month from September of 2022 to September of 2021 has shown an 11% increase in rental rates. So think about that, you guys. If you are a real estate agent and you have a client who's in a rental, remember the interest rate on a rental is 100%. There is no discount. It is 100% you are paying somebody else's mortgage. So if you're a real estate agent and you have clients that are in rentals, let's have conversations with them about numbers, right? This is why numbers don't lie, right? There's too many agents who come into my Real Estate Growth Academy programs who don't understand the numbers. They post things online because their brokerage tells them to post these infographics. Well, when you post days on market or longer, when you post prices are going up or prices are going down or rates are going up or rates are going down without an explanation, you cause uncertainty in the marketplace. And when people are uncertain, what do? They don't take action. Now, everybody shouldn't run out and buy a house, and everybody who's not buying a house shouldn't stay not buying a home. There are a lot of people who should purchase still in today's market, and there's a lot of people who probably need to sit out on the sideline. As a real estate expert, it's your job to educate your clients on why they should or shouldn't do it. And then the client should potentially meet with their financiers and discuss whether or not they want to purchase, right? They should have a team. You should have a team. You should have people in finance available, not your mortgage officer, but you should have other people who can advise your clients like, hey, if this were to happen, this were to happen, this were to happen. Become a fiduciary, right? Create a plan of attack for your clients. And if they decide not to buy, that's great. You have helped them make a huge decision and you've helped them remove uncertainty. And if they decide to buy, they will do it with confidence and they won't get buyer's regret. They won't have buyer's remorse and want to back out of the contract 1 week before closing. Because when you map out all the scenarios, okay, if this happens, if this happens, if this happens, here's what we're going to do. Here's what we're going to do. Here's what we're going to do. They have confidence in the market. And if the market goes down 10% and you negotiated a 10% decrease off the list price, guess what? They're okay with it. They're like, cool, the market dropped 10%. We got a 10% discount. We're at par. No big deal. If the market goes down 15% and you got them a 10% discount, they're like, all right, we're down 5%, but it's not the end of the world. We're getting out of our rental. We're starting to build some equity. And then when rates eventually come down, it could be 1 year, it could be 2 years, it could be 3 years, it could be 5 years, it could be 10 years, right? Remember, from the 80s to the 90s, we had rates that were much higher than where they were at from the 2010s to the 2020s. So they might have a higher interest rate, but they're still going to be building some equity. There is nobody that says that we are going for a 20-year period where we are not going to see economic growth. I have yet to hear that. I've yet to hear that housing is going to crash to the ground and it's never going to come back. So more and more people are living in their houses longer, and that's okay. They're not necessarily stuck. When people look at the price of their home, they become so much more emotional than when they look at the price of the stock. Why? I don't know, but it's just how it is. We are more emotionally attached to our home values than we are to our stock portfolios. And stocks are very liquid, whereas homes are not. Most people don't move. At one point, my parents' house was worth like $2.4 million on paper. They didn't sell it. It went down to 1.3, 1.4. They didn't sell it. Now it is where, I don't know where it is right now, but they're still not selling, so it doesn't matter to them. The only reason why it would matter is if they're trying to use their house as a piggy bank, which is very dangerous. Or if you take an adjustable arm mortgage rate on a property because you assume the property rates are going to come down and then they continue to go up and your rate continues to adjust upwards, you get into trouble. As a real estate professional, you need to know how to speak to all of the different products that your clients already know about, or some mortgage professional is trying to pitch them because they're stuck and trying to make a commission, right? You need to be able to advise your clients. We would advise our clients that would say, hey, we want to do an adjustable arm mortgage. And I said, well, that's okay, but what if this happens? Oh, I never thought of that. Because we always think of only the upside. We don't think of the downside. So what would happen if this happened? What would happen if that happened? What would happen if this happened? You guys, this is where you got to take your pen, your paper out. You got to take, you got to have a laptop or an iPad with a mortgage calculator available. And you got to show them what happens when the arm adjusts in the way that they don't want it to adjust. It's very painful. They will lose a ton of potential equity in the long run. They could lose their entire down payment. They could get foreclosed on, right? It's our job to make sure we protect our people. And if you don't know what these numbers are, how do you show up as an advisor? So we know that pre-pandemic rents, $1,600, now $2,100. We know that rents are going to continue to increase in most markets. Maybe not at the 5 to 10% rate, but at a very high rate compared to normal, 3, 4, 5% in many markets. We know that the rental market is at almost zero vacancies all across the board. Here's a caveat though. Multifamily, there's a ton of units coming on second half of 2023. So multifamily, there might be some opportunities for people to get rents that don't increase year over year just due to the competition. However, with such a low vacancy rate, we don't quite know where that's going to be. So if you don't know the numbers, you don't know how to advise your clients, which is why I stress to my clients, you need to become a financial expert. And if you don't know, you need to talk to financial experts who want to partner with a professional real estate agent that will teach you about what these numbers mean. And then you have to read financial news. You have to listen to financial news. You have to listen to multiple sources because you need to be able to give both the positives and the negatives to your clients so that they can make the right choices. Dave Ramsey says, buy a house if you can afford one. He believes that you should buy a house, and then when the rates readjust, you should adjust and get a new mortgage. That might be great advice. Maybe it is, maybe it isn't. But we can't use blanket statements across the board. We can't use blanket statements across the board for everybody. For some people, it will work. For other people, it will not work. If you don't build your brand online and you have 1 or 2 leads in your pipeline, you are now at the mercy of trying to make those people sell, which is a very bad place to be. So inside the Real Estate Growth Academy, some of the things that we talk about in our dojo weekly practice call is how do we use statistics? How do we present the facts? How do we position ourselves as experts to help our clients make the best choice? Not so that we can make the most money, so that we can educate our clients so that they can make the best decision. If we are not the professionals, and if we are not educating, and if we are not teaching, we don't deserve a commission. I am a true believer that right now in this market, as a real estate agent, you are actually earning your money, because in 2021 and 2020, you didn't really need to earn it. You just had to be a warm body that could write an offer and pray to God that your offer won. Now you got to learn. You got to learn the conversations with the other agents. You got to learn the numbers. You got to learn what clients should look for. You got to learn what investors are going to look for. You got to build your investor list. You got to know these stats. You got to get on Zillow and Redfin and study. You got to get on Keeping Current Matters and study. You got to learn from Bigger Pockets what investors are looking for and study. If you don't do those things, y'all, you don't deserve the clients, because you are doing them a disservice, and it's very selfish and unethical. So if you'd like some more information on how we help our clients, just send me a message. We'll get you all the next steps. If you like this content, it's beneficial, and you learned something, do me a favor, hit a like, drop a comment, subscribe to the channel, and I'll see you guys on the next one.